Hi, everyone. This is Jason Burack of Wall Street from Main Street and managing editor of The News Doctors and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 22. Now, Eric, I want to talk about the gold and silver markets. Do you think the correction we've had in the gold and silver markets is over?
Correction ended in May. We went through most of May going down, and first couple days of June, we had that transition with the unemployment report coming in, printing in at 38,000 jobs being created with an expectation of 165 some odd thousand, if memory serves. And that pretty much flushed down the toilet any kind of discussion about interest rate normalization for June, probably July and whatnot. I mean, prior to the month of May unfolding, we had basically a record number of Federal Reserve personnel, the Board of Governors and voting members coming out and job voting, trying to guide expectations that the economy is doing peachy, that we can raise interest rates because of that, and that everything is doing just fine. And once the unemployment report was released, that all of that entire sentiment, house of cards, shifted. So start of June, we have had a wonderful move, and it's continuing on. And I think that we're going to see a lot higher prices. No summer doldrums within the precious metals community, and ultimately, 1,500 or so by the end of this year. I think that's what we're looking at, because there's a very significant shift in people's understanding about the reality that the economy is not doing well, and that the central bankers don't have investors' backs anymore. So there's a lot more nervousness.
Yeah, the real economy in the U.S., there's worsening stagflation. We're seeing a lot of evidence of that. We'll talk about that later in the show. But to add to your points there, that 36,000 or 38,000 jobs number, we know it's probably going to be downward revised later in the months to come, because you know what? That's what happens every single month, is whatever the jobs number is, it's always revised downwards months later. And, it's not creating exactly these six-figure, high-paying, full-time jobs. Most of those jobs that were created, I haven't looked at the exact details. I've read articles about the jobs report, but I don't remember them offhand. But, I don't think it was any good types of jobs that are going to get Americans out of the hole. So, and then you posted a great article on News Doctors about Jim Rickards and his tweets. He thinks now that the Federal Reserve could potentially delay any talk of interest rate increases now until December, because we have the Brexit vote coming up, and I don't think the Federal Reserve wants to, get in front of that news with an interest rate increase before the Brexit vote is done as well.
And then the U.S. election is on the horizon as well, and the Federal Reserve tries to present itself as not being political, even though that's kind of a joke. And they'll not likely want to raise going into the election, because it'll upset the markets and make it less likely that Hillary will win. And we know for a fact that the lion's share of people on the Federal Reserve are leaning more towards the Hillary camp. So they're best way of appearing to not be political while simultaneously helping to keep in power the system that they are more in favor of would be to simply do nothing. And that's probably what's going to happen. So I would agree with Rickards. And in fact, I think that the case can be strongly made that we're not going to see any rate hikes anytime in 2016 ever, just because the stock market is in the process of rolling over. And when it gets worse, their incentives will be to try to save the market.
Do you think then, Eric, that the Federal Reserve, since so many of these PhD economists, there's actually articles that come out saying that a lot of them have donated money to the Hillary Clinton campaign. Do you think then that a lot of them are worried if the stock market does crash, that would help Donald Trump in the election?
Yeah, probably. I'm only speculating. I have no ability to know for certain where their perspectives lie. I haven't seen any, interviews where people are discussing in great detail their feelings about Trump or Clinton, and I wouldn't expect any of that to ever be done either, because of their goal to maintain the fiction that the Federal Reserve is not political. But ultimately, you just have to assume in the back of these individuals' minds that they would like to see a Clinton versus a Trump.
Yeah, I mean, we've seen the research confirming that with tracking political contributions from the Federal Reserve. I think it was on Zero Hedge a couple months ago that a lot of campaign money from Federal Reserve members was going to Hillary Clinton.
It should also be noted, too, before we move on, Trump has occasionally said things in the direction of skepticism about the Fed. So they probably see him as somewhat of a threat. I mean, maybe he might jump on the bandwagon when it comes to the audit the Fed movement. If I recall correctly, that Trump has actually stated on the campaign trail a couple of times that he is in favor of auditing the Fed.
He's also talked about replacing Janet Yellen too.
Right.
But I mean, if he just replaces Janet Yellen, it's obviously not going to do very much because there's it's just next in line for the Keynesian from another bank.
Yeah, but he only sent that as kind of like a missile across the bow for political points, but it nonetheless advertises the fact that he's no friend of Yellen and the whole philosophical perspective that Yellen represents.
Now, I want to get back to the gold and silver market. You published an interesting story this week on News Doctors about the Bank of Montreal launching a physical gold fund. I think it's supposed to be around $500 million worth of physical gold they're going to buy, and they just put out a prospectus. There is some really interesting stuff in there about the prospectus. Do you want to tell our listeners about that?
Yeah, and I'm pulling the article up right now. So Chris Powell had found this originally and published it at GATA, and GATA.org is a really great site as well, too. People in our audience should check it out. They have a tab called Dispatches, and it's a great service. Chris Powell is the managing editor of the Manchester Guardian, I believe is the newspaper. Forgive me. Looking up here, my bio doesn't even have the name of the newspaper. I need to fix that. That's embarrassing. In any event, the prospectus had a number of things, as Jason notes, and amongst them, the prospectus provides a few details, including, quote, it cautions that the official sector is active in the gold market and can affect prices, an acknowledgement that will never be made into any of the reports of mainstream media. Chris Powell's editorializing here, and the fund will not insure its assets, trusting the Royal Canadian Mint to protect them. The fund is structured separate from the Bank of Montreal so that its assets will not be vulnerable to the claims by creditors against the bank. And the punchline, the fund seeks to eliminate derivatives risk, i.e., and this is a quote, derivatives risk, i.e., the use of unallocated gold certificates, exchange-traded products, derivatives, financial instruments, or any product that represents encumbered gold, quote unquote, as well as, quote, empty vault risk, end quote, or gold bullion lending risk. This is kind of like an example in a roundabout way of rats jumping ship. The bankers here are marketing their product in a way that differentiates it from the existing ETFs. And
from GLD.
From GLD being the granddaddy of them all to, the other ETFs. I mean, the second ETF is pretty significant in size. I think it has about 200 metric tons, 150 metric tons of gold in it. And they are trying to, market themselves as having physical gold. And that the use of these terms is pretty significant because legally, apparently their lawyers are giving them advice as well. It's not just a marketing aspect. Words chosen in prospecti are looked over by the legal team with a fine-tooth comb, and I suspect that this is a nice example of a milepost along the road of this bull market that we see unfolding, where over time, a growing number of bankers are going to be looking at the end game as it unfolds. This being the end game makes it such that it's more to their advantage to try to bring in monies flowing into the alternative asset sector. And how do they differentiate themselves? Well, they address the prime concerns that a growing number of people are becoming aware of, and that's empty vault risk, quote unquote. I mean,
they can be more honest than the other prospectuses.
They're literally bird dogging the fact that we have encumbered gold everywhere.
You know what's really funny, Eric? I don't know how many people on Wall Street that you speak to, but I've interviewed billionaires and spoke off the record with hedge fund managers, regular guys, not Austrian school, not people who like gold or silver or own or would ever admit to owning any. But they always call me in the past a conspiracy theorist for suggesting that their GLD doesn't have all its gold and things like that. And, now we have a situation where we have some of these large banks admitting some of the things that for years we've been called conspiracy theorists for trying to bring up to people that, you haven't proven the gold's there with independent audits and all these different things. So it's just amazing. I think the Gandhi quote applies to this situation, that we're in that stage where, first they ridicule you, they call you names, call you conspiracy theorists, say you're an idiot, a moron, a stupid gold bug, and then then they start adapting to the things that they were saying that you were lying or making things up, and then they start admitting it's true.
And it comes at a time when more and more very high-profile investors, the Soroses, the Druckenmillers, and so forth of the world, are also helping to wake a lot of the conventional financial world up, and BMO is seeing that as an opportunity. BMO is a Canadian-based bank. They're not quite as much in the money center of, say, a J.P. Morgan, so it's kind of not surprising to see this marketing spin and legal consideration going into their product. And I think it speaks to what will be happening on an increasing basis as the months unfold of this bull market. On an incremental basis, more and more of the traditional Wall Street community is going to try to figure out how to make some money off of this.
Yep, and we know that gold and silver have been like the top performing asset, and the mining stocks have been the top performing asset in 2016. We've seen a nice rally in other commodities as well, we'll talk about later in the show. But there's just a lot of evidence that the global economy right now, the fundamentals of it, is one major clustercluck. The global economy is not doing very well. Although commodity prices rising will help a little bit in certain countries, but, they would have to go higher and stay there. And plus, a lot of these countries took on so much debt during the previous commodities bull market that, even a temporary rally in commodities is not going to solve a lot of the problems in the global economy, especially with dollar-denominated debt. I want to transition now to the oil market. We've had a nice rally in oil in 2016. What I would describe as the oil market rally, because I think the oil price has gone up so much so quickly recently, I think there's a manipulation tug of war right now in oil. And let me explain that a little bit more for our listeners. I think Russia and Saudi Arabia, the two largest oil producers in the world, they're low-cost producers compared to a lot of other oil producers. So they would be on one side of this tug of war. They were trying to manipulate the oil price down the last couple of years to bankrupt the higher cost oil producers that took on too much debt, et cetera, et cetera. Basically, most of the shale oil producers who are higher cost, some of the offshore water, deep water guys, et cetera, et cetera. But on the other side of the tug of war, Eric, I would say is the Wall Street banks. These are the guys who are trying to financially engineer this rally in oil, whether it's with high-frequency trading algorithms, blowing out the shorts there and forcing short covering rallies, or positive research reports on oil, or helping the shale oil producers, not calling in bankruptcies and defaults and stuff so they can sell more shares, so the Wall Street banks then don't have to default on the loans that they've given out. What's your views about this with this manipulation oil tug war? Do you think my theory here has some merits?
Well, there's definitely an incentive within the financial sector to see the oil resuscitate from its low of 26.05 or so. West Texas Intermediate hit that level in February. And, whether we have conspiratorial actions going on, I find what was going on in Nigeria rather fishy, frankly, with the Avengers group coming out of nowhere, above and beyond the Boko Haram rebels there and that branch of Al Qaeda, and that combined with the fire in the Alberta oil patch took off over 1 million barrels of daily crude, and has helped to stabilize the marketplace. There's that. There's also probable financial gains that were going on as well, too, to help stabilize the marketplace, because it should be noted, ever since this February period, we still see many a report of large numbers of tankers hanging out in Singapore and so forth. I mean, this market is not healthy, and part of what we have seen in terms of this rebound has been just an artifact of the supply coming offline that presumably at some point will come back, certainly in Canada. So we're not out of the woods yet, but then again, we're seeing, as you alluded to earlier, a reflationary move across pretty much the entire commodity sector, and it's been going on through fits and starts this whole year. And it's a stagflationary artifact of, the monetary printing press is going wild, and finally we're beginning to see that catch up with us.
Yeah, I think we're seeing worsening global stagflation here. We've seen articles about Brazil. It's having the worst unemployment, and also some of the, we know Brazil has had hyperinflation more than 5 times since the 1930s, but it's had an economic contraction, the worst since the 1930s. Unemployment is over 20% in Brazil for skilled labor. So a lot of the people there that were engineers and working on oil rigs and working at mines and infrastructure and stuff have had to be laid off. So I think there's tons of evidence in so many different countries. Also now in the United States, even the government's own statistics, Eric, are showing that rent inflation the last couple quarters is up 8%, which is pretty rare that they'd actually show that. We knew that was the case in reality from the Chapwood Inflation Index and talking with people living in, metro areas, how their rent was always going up. But now I think the Federal Reserve even said in the last quarter or two that even wage inflation for certain jobs is up 4%. So they were surprised to see that when, the economy was slowing down. So we are getting this type of stuff that Keynesians said couldn't happen with the Phillips curve. This is something, hardcore Keynesians like Janet Yellen like to talk about still with the Phillips curve, how stagflation is not possible because you can't have high inflation and high unemployment at the same time. The 1970s stagflation should have technically killed Keynesian economics. There's really excellent articles recently on the Foundation for Economic Education website talking about these things. I encourage my listeners to go there and read some of the articles about Keynes and stagflation and stuff like that.
We should also point out, too, that, it was the Dallas District Fed that came out and asked local banks in the oil patch to be more lenient when it came to the terms and reserve requirements and so forth, that they would compute for managing the loan books that they had with the oil patch there. So, did you call that outright manipulation? I don't know. I mean, yeah, I do. So it's clear that isn't a conspiracy theory. I mean, it's documented, and the incentive systems are here for the financial sector to look out for its own. So they definitely have been doing things to try to resuscitate the market, to keep it from falling off a cliff, et cetera. But that whole stagflation thesis, I think, is where we're headed. And oil, through 2014, or at least mostly through June and beyond of 2014 to February, where we bottomed out at 26, is now in the rearview mirror. And as we move forward, this higher and higher oil price is going to translate through to the CPI. And even though the government CPI is a bastardized, construction, it's still going to reflect higher inflation. So even with government numbers, the Federal Reserve is going to be finding itself facing the problem of higher interest or higher inflation and stagflation economics.
Yeah, I mean, I've been saying for years that we've had stagflation and that going forward it would get worse and worse with more misallocation of capital, with higher unemployment rates, with inflation sneaking into the global supply chain and other things. I want to provide some evidence of the inflation. I have Ned Schmidt's agriculture Commodities newsletter up. He sent me an update this morning, and I have year-to-date agri-food prices, pork, hogs, soybeans, sugar, sorghum, palm oil. A lot of these are up more than 20% year-to-date. There's a few that are up more than 10. There's a number of other ones that are also up more than 10%. So there's been huge, and then we have the oil rally, which is one of the big ones. So, I mean, when the oil price is, the oil is involved in the making of so many goods and services and stuff like that globally for transportation to get to work and stuff. So it starts to really push the cost and gets rid of, people's savings and discretionary income when gasoline prices start to really spike. Not that people had a lot of savings and discretionary income to begin with, but, you know, a much higher gasoline price takes away whatever surplus was left in people's household budgets. You know, do you think, Eric, the Federal Reserve, I think long-term, the Federal Reserve is probably attempting some type of intentional, orderly, coordinated collapse of the U.S. dollar and purchasing power? And do you think then that this has been the case for a long time?
Yes, and the goal has been to try to do some coordination when it came to the Japanese yen, the British pound sterling, and the euro in particular. And we've seen round-robin QE and alternation of which currency would be strong. But if you look at the period between 2009 and today, you know, the goal has been to try to depreciate currencies overall such that they wouldn't have gigantic impacts on each other in terms of their cross rates. And when that is achieved, you can kind of hide the inflationary impacts, or better said, the depreciating purchasing power of the currencies. And now that the dollar is poised to go through a more accelerated decline vis-a-vis other currencies, because there has been a rotation in this, it's also going to contribute to the exact same phenomenon we were discussing about a stagflationary cycle. I mean, normally people would say, well, the economy is slowing down. Why would demand for commodities be going up and helping to push prices up? What's going on is that we have a debasement of the purchasing power of fiat currencies, and now that the dollar, which is the denominator of most pricing for commodities, is also declining, around the world in other currencies, people will be paying more for commodities.
So this commodity rally then isn't a demand-driven rally. Then it's a currency. It's factoring in a lower purchasing power of the fiat currency.
Well, the currency dynamic is kind of like the icing on the cake, frankly. I think that in a grander scheme of things, we've had relatively speaking, a longer period of time where we've had a bear market in commodities, or semi-bear market in most commodities, particularly in gold and silver. And it's a move towards real assets. The monies around the world are looking at a bond market that's ridiculously overvalued, a stock market that's at an extremely high valuation and kind of a mirage. And incrementally, people are beginning to move into the commodity sector because, I mean, let's face it, we've got 95+% of money under management that hasn't been able to do anything on the fixed income side other than get benefit from the whole front running of the Federal Reserve and other central banks as they have moved interest rates down to record lows. And so the fixed income side, for pension funds in particular, is a basket case. And when on an incremental basis, a money manager running a large fund looks around in the world in terms of the assets that they can select from to put into their fund, well, what hasn't moved that much? Commodities. What happens when the stock market rolls over? Bonds is a nice safe haven traditionally, but bonds aren't paying much in interest. People who want to put bonds into their portfolio to benefit their shareholders would be playing a greater fool theory, so to speak, because they were hoping that, a deflationary spiral would have bonds rise. That same very manager might think, I'll add a little bit more commodity exposure. And I think on an incremental basis, that's part of why we're seeing the commodity sector beginning to move up. And that's going to continue to move up, even though it's counterintuitive to and the global economy slowing down.
Well, good investing is often counterintuitive because, just because something's going up doesn't mean it's going to keep going up. Like people, the trend traders like, the stock market is going to keep going up. The dollar is going to keep getting strong. We saw a lot of these articles out the last couple of years. The commodity, we would see all these articles, any commodity bull market is totally over. You can sell your commodities and they won't go up again for a decade. Mm-hmm. We're seeing these types of articles come out the last couple of years. But yeah, I think this commodity rally, to add to your points there, I think it was value driven. So I think contrarians were looking to get out of stocks, get out of bonds, because those had been bull markets for a while now. They had taken some gains and they were looking to go to cash for insurance, buy physical metal, and then maybe also look for undervalued markets like commodities. The other thing I would say is also on the supply side for some, not all the commodities, but some of these commodities. We started to see mines shut and bankruptcies and things like that out of the supply side for a lot of these commodities. And I've been saying for the last 2 years or so that, it wasn't sustainable. Maybe certain commodity prices would go a little bit lower, then we would have even more bankruptcies, and the market would have to balance to the point where the price of those commodities would have to be higher, or there wasn't going to be supply available given the amount of demand for certain types of commodities.
Yeah.
And I thought gold and silver would lead that rally. I thought oil would also lead that rally in commodities. So I've been proven right so far that gold, silver, and oil would be three of the main ones leading the rally in commodities so far.
And it makes sense that agriculture is now catching a bid and beginning to move up as well, too. I mean, not all commodities are created equal, obviously. We recently had this whole spat in the news about the steel dumping from China. And overcapacity is so vast in the steel sector, and even in copper and other segments, that those segments are not going to respond as quickly.
Yep.
I looked at the forward curve for copper, and 2 years out, easy, it's like just as flat as you can imagine. There's just no forward expectation at all in the marketplace that copper is going to reborn.
Yeah, the only base metal with good supply-demand fundamentals was zinc, and that's because there was a lot of mine closures of zinc mines that had been running for decades. They had been depleted, their reserves, and their grades had fallen so low that they were shutting down these enormously large zinc mines the last couple of years. So there was going to be a supply shortage in zinc that was needed. So, I agree with you about base metals. I think a lot of these base metals like steel and iron ore and copper, these are not long-term buys. I think there's going to be a lot more pain in those on the supply side for the miners of those companies. They're either going to have to shut down the higher cost mines or go bankrupt. There's going to be a lot more bankruptcies. So I think we'll see a combination of that. I think, also a lot of these base metal miners, they have gold and silver byproduct. We're going to see the royalty and streaming companies coming in probably in the next year or so, like Franco-Nevada and Silver Wheaton and Royal Gold and those guys. And they're going to be taking the value of those precious metals as a byproduct in those base metal mines. They're going to be, buying them for pennies from the base metal miners because the base metal miners can't raise capital. Now, I want to bring up something that I heard from one of my contacts here in the D.C. area. She's actually an entrepreneur and a libertarian. She started a blockchain company. She was actually allowed to go and present last week to Janet Yellen and the Federal Reserve Bank here in D.C. Her and other Bitcoin and blockchain experts were allowed to present for a whole day last week to Janet Yellen and the other Federal Reserve people about Bitcoin and the blockchain. Apparently, government, instead of just outlawing it, they're going to be looking to adapt to using some type of government, maybe dollar blockchain. So every dollar you earn then has a tracking ID on the blockchain, and then they could track all your expenditures and things like that, or put in a VAT tax. I think, unfortunately, that's the way things are going. That's just the thing about technology, Eric. I think in a lot of cases, most technology is neither good nor bad. It just depends on who wants to use the technology and what their morals are, I guess.
Well, there's no doubt that the U.S. government would love to co-opt the technology and make it as a technology that will support the fiat system. And the notion that we're going to have a digital currency that isn't part and parcel of the U.S. dollar system for the interests of the Federal Reserve and the Treasury is just a fantasy. So it'll be interesting to see how this all evolves. Well,
if they did add that, then we would know every single dollar that went in and out of the Clinton Foundation. So.
Don't tell Hillary.
We would know did you get to listen to Charles Hotel interview? We would know potentially then the over $100 billion and who was sending them, where they were sending the money to, and who was giving the donations and stuff like that. So that would be maybe one of the benefits of this. Although I don't like the fact that government would be able to look and see all my purchases and all these things.
Yeah. Well, it's actually just as easy for the government to see all of that without blockchain if we were to go to a cashless society, because it'll, debit cards, credit cards, et cetera, that kind of stuff would all be recorded. And it's not as, elegant as the blockchain, obviously, but, who says the NSA is elegant?
Exactly, and I think Edward Snowden on his Twitter just revealed that some more spying programs. So unfortunately, it's going to get Big Brother is going to get worse before things get better, but at least people are out on the internet trying to share information and tell people what's really going on. In terms of the oil market, though, guys, I think there's going to be a lot more volatility. So if you have had some good gains on some of your oil stocks, I would probably start taking some gains here if you do have some nice gains. And I would look at some more volatility trades. So I think, this rally, there's been a nice rally in oil stocks. The rally may have gotten ahead of itself. If we do get back to, high 50s, low to mid 60s in oil, the shale oil companies, these marginal guys, they're going to start bringing on some of those wells that are capped, so they can bring on more supply. So that would probably start to limit the rally and probably knock us back down again. So, I think oil's probably going to have a lot of volatility now going forward. We've had the rally that I expected. We've had it a lot faster than I expected. I did expect it at some point in 2016, but it all happened, only in a handful of months. But that's just the way markets work sometimes, manipulation or not. And so I think people, if you do have some gains in oil, I think it would be smart. You can either hedge your trades and buy like a married put or put protection or something. There's ways to put insurance on your trades or develop volatility trades in the oil market. I think the oil market's going to have more volatility. I think, the Saudis and the Russians are not done wringing out. They want more oil producers that are higher cost to go bankrupt, and they want more market share. So I don't think, the Saudis and the Russians are just going to sit back and let these shale producers with the oil rally start bringing on more production again without a fight.
And then there's also the issue of what's going on in Saudi Arabia's government. And frankly, I think that the prospects of the Saudi regime falling apart with a coup is quite material. There's a prince that's in his early 30s or so, and he doesn't have a lot of respect amongst his brothers. His father is the current king, and the king has dementia, and he's probably not long for the world, and there's going to be a palace fight. And what happens when that happens could just be mind-blowing, because Saudi Arabia internally is no longer stable.
Did you also see, Eric, that the largest oil services company in Saudi Arabia can't pay its bills on time anymore, so they're issuing IOUs?
Yeah.
Yeah, and they've tapped the bond markets a lot too, and there's the Saudi Aramco IPO coming up. So there's a lot of, obviously Saudi can't run these deficits for forever, but since they're the lowest cost producer and they do have a large sovereign wealth fund, they can continue it longer than the shale oil producers that are high cost with bad balance sheets. So it's an interesting, fight going on in the oil market right now.
And the Saudi Arabians are cozying up, or at least expanding their options when it comes to the geopolitical table. And they've made overtures to Russia and China. And if this palace coup were to happen, the kind of competition amongst power interests, United States, Russia, could in fact create some pretty unstable conditions within the country, and then major geopolitical shifts that would elicit concern in the halls of the Pentagon, and we may even end up seeing the United States military in Saudi Arabia. If we have a palace coup, and it looks like Saudi Arabia is about to fall apart, and then maybe one faction lines with more of a Putin interest, then that kind of scenario could unfold. And there's not enough information now to be able to forecast that kind of thing with any degree of probability assessment, but it's a scenario that's possible. And the kind of things that can come out of that are things that I even shudder to consider. I mean, we're talking about a scenario that could lead to World War III. It's quite scary what's going on.
Yeah, all the more reason, Eric, that people should own some cash outside of the banking system, cash for opportunities, for asset prices that go on sale, physical gold and silver, some gold and silver shares on dips, the good companies. Don't load up on lots of juniors that have bad balance sheets and things like that. There's a lot of people making money off of juniors right now, but don't put all your money in juniors. I know people are making lots of money off juniors right now, but be wary of them. There's going to be a lot of really shitty promotion jobs coming forward, companies that have, nothing, absolutely no prospects whatsoever, where the stock goes up and it's a total, fraud. So people have to be careful with that. I think, Bitcoin, Eric, has had a really good rally in 2016.
Yeah.
The Bitcoin price bottomed out around $250, I think, last year. It looked like a pretty good bottom on the charts. I thought it was a good speculative buy starting, mid to late last year. And Bitcoin has basically doubled. That's been a lot of, money, I guess, leaving China. There's been big Bitcoin purchases in China, too. Because of that RMB devaluation, you have the smart Chinese speculator and businessman getting money out of the country in Bitcoin.
And is it true that the volume in Bitcoin is now generally about half in China? I know that it was earlier, but
I don't know the exact amount, but yeah, the largest growth in Bitcoin trading is from China recently. Yeah. So I have no doubt. So, I mean, people, this is just the thing. This is just how markets work and people work in general. When the government expects something to happen, there's always unintended consequences, and things don't go as planned the way the government expects. Yeah. So the government expects you to be an obedient little sheeple, and if they put, tax laws and currency controls and all inflation and all these things on, they expect you to, a lot of them, to be an obedient little citizen and do everything you're told. People aren't going to do that. Look at their behavior in China with this RMB devaluation. They didn't keep their money in the bank account to let it be devalued. They went and bought Bitcoin instead of, and also probably physical gold and silver as well, instead of holding the money in their banks in China to let it be devalued.
And relevant to the conversation we're having about, the degree to which government tries to co-opt or block Bitcoin and similar technologies. Bitcoin now, if you take the number of coins that are out in circulation or in existence times the price of Bitcoin, it's still under $10 billion in total market value. And it's a small drop in the overall sea of fiat. That's going to change over time. And it'll be interesting to see how governments react to it. But all things considered, frankly, China hasn't been very aggressive when it comes to trying to stop Bitcoin and people exiting the system. But I would not be surprised if we begin to see some of that, and even as early as this year.
Well, we know that China has been encouraging people to buy physical gold and silver because they know the gold and silver markets are manipulated. And we know that. We know from releases, even Bloomberg had a story in the last month or so saying that China wants more control of all commodities markets since they're the largest consumer of commodities now. So that's what they're saying, that they want to move more control of commodities exchanges to China. They don't want London and New York City and Chicago having as much control over commodity price setting because China consumes the commodities. They think that they should have more control over the commodities exchanges and price setting and things.
That's where the markets are moving, and the bankers are moving there too. The J.P. Morgans and so forth are setting up shop in China and trying to ingratiate themselves into their financial markets. So.
Yeah, and I think China's looking to start buying gold mines. I saw stories on Dollar Collapse and elsewhere that China's been giving money to their sovereign wealth fund and to large Chinese gold miners to go out there and start buying up gold properties that they like. So I think we're going to see that as also, helping set bottoms in the gold market going forward. Now, Eric, it's time for the scumbag nominee section. I'm reading from Against Crony Capitalism. We have Venezuela's collapse. We've talked about it on the show before. But there was a good article that they posted from the Pan Am Post, talking about the Hollywood celebrities. Basically, they're the same type of celebrities that are threatening to leave the United States if Donald Trump wins the election. And, these guys are hypocrites. They probably won't leave the country at all. If Trump does leave the election, they'll probably just keep on bitching. I think Cher recently even threatened to kill herself if Trump wins. Which, yeah, it's just ridiculous. She won't do it. It's just ridiculous. But anyways, though, we have. I'll put it in the quote section for scumbag nominees. We have these Hollywood celebrities. All of them are multimillionaires many times over. They've made lots of money off free markets and capitalism. Here they are, a couple years ago, talking about all the good jobs that Hugo Chavez is doing and how well the economy is doing. We even have, Eric, in this article mentioned, and I've seen it mentioned elsewhere too, Joseph Stiglitz, who is now Hillary Clinton's top economic advisor a couple years ago, talking about how Venezuela was such an economic success. So, I know Stiglitz has won a Nobel Prize in economics, and he did work at the IMF and the World Bank, and he has criticized their predatory practices at least a couple times in the past. But, for him to go out and say how much of a success Venezuela was and criticize the IMF and World Bank and then get back in bed with Hillary Clinton. There's at least a little bit of hypocrisy there and some red flags to me.
Yeah, he's done some good things and has been a voice of sanity against the so-called Washington Consensus. He pushed back against the rape and pillaging of the Yeltsin years when the Soviet Union fell apart and Yeltsin came into power, and all of the oligarchs that were Western shepherded by Jeffrey Sachs out of Harvard and so forth. Stiglitz was one of the sole voices back in those days that actually criticized how we had disaster capitalism and raping and pillaging of Russia. So that was pretty impressive. I mean, the guy he's not 100% establishment, but this move back into the Hillary camp is definitely suspect. I need to do a little bit more research to find out what is his thinking and whatnot. It could be partly just him recognizing that he'd have a little bit more influence on power, and therefore he's like cozying up to the Ice Queen and doing it. Who knows? I don't know, but. He's definitely not cut from the exact same cloth as Hillary Clinton, so it's a little unusual that he's linking up with this campaign, and there's something going on here. Maybe it is an example of his morals being surrendered such that he is attracted to the levers of power, and that never is a good thing because that will find him corrupted.
Yeah, he may just want like a new position like Treasury Secretary, or maybe he wants Janet Yellen's job at the Federal Reserve, or maybe he just wants a higher payday at a think tank or something like that, helping once Hillary gets the election. The Clinton Foundation will make a donation to a think tank, and then he gets, a cushy couple $1 million a year job or something.
Yeah. Like I was noting before when we were talking off air, I seriously doubt Treasury Secretary or, head or any of those kind of positions would be a reward dangled in front of him, because Treasury Secretary usually is filled by someone who's served in the New York Fed or maybe head of Goldman Sachs, like,
yeah.
Or Citi, whatever. That typically is the milieu that they draw from.
Yeah. So for my other another related story to that is Maduro, who's still technically running Venezuela while running it into the ground. He just endorsed Bernie Sanders, but we know Bernie's basically the National Democratic Party. They basically screwed over Bernie to make sure he couldn't get the nomination. They did a bunch of different things to him, but
well, like we were saying, 2 months ago, the superdelegates were going to block any idea of Bernie ever getting in. So that's what happened. And conceivably, Bernie, were there no superdelegates, it's very possible that Bernie could have, in fact, been the Democratic nominee.
Yeah, I think he did win the popular vote in a bunch of different states against Hillary. So, he has that claim, and that's why he hasn't officially dropped out yet, although, he's basically lost. But he says he's not giving up. So we'll see what happens. I think he's gotten over $200 million in donations, Eric. Does he have to give it back, or is he going to be putting it in an offshore tax haven then?
I think actually the election laws are such that, and don't quote me on this, but I think that actually the PAC money can in fact remain in the PAC that he'd be able to marshal for other political campaigns.
Yeah, because I know Bernie Sanders he has a bunch of Bernie Sanders Democrats running for, local legislative seats at state legislative levels and county, and also, for Congress seats at the federal level. But yeah, I just don't trust any of these guys, man, because I've heard too many stories out of DC and from friends in the financial industry of, guys saying one thing in public when the TV cameras are on and doing the exact opposite in their own lives. It's the level of hypocrisy of, Hollywood celebrities and politicians is just unbelievable. Most people, regular people who haven't woken up wouldn't even believe the amount and level of hypocrisy.
Yeah, if anybody that's listening to this actually knows the answer to that question, please do put the comments in the YouTube section, because I don't recall exactly how that campaign regulations work. And I know Bernie wasn't taking a lot of PAC money, so I'm not sure what would happen with the monies that he received in his personal campaign. I think that you're able to marshal that as well for future campaigns. He's certainly not going to be giving it back. I've never heard of that kind of thing happening.
Yeah, so like in terms of the other scumbag nominees, I mean, I could just read againstcronycapitalism.com for another 20 minutes, 30 minutes with all the different levels of corruption. I think like the guy in charge of prisons in New York, he just got busted on a huge corruption scheme. I just saw that across my Twitter feed last night. The New York Post did an expose on that. We have the Catholic Church spent $2 million on major New York lobbying firms to block child sex law reform, which is just, morally ridiculous. We have showers of cash for Pentagon contractors. I could just start reading headlines for 20 or 30 minutes additionally. I won't do that. If you guys want to just see the level scumbaggery, skullduggery, tomfoolery going on in this country against crony capitalism. We should probably have maybe Nick Sorrentino, who runs that website. We should have him on maybe a Welcome to Dystopia podcast talking about some of his favorite scumbags.
Okay.
That would actually probably be a good idea.
Yeah, that'd be a lot of fun.
He's not that far from us, from me here in the Washington, D.C. area. I think he lives in Richmond or Fredericksburg. I think he's like an hour or so away. So, yeah, there's just so much stuff here on this website of different levels of scumbaggery. The documentary Brexit, too, I wanted to talk about that. The bureaucrats, Eric, the details from the documentary filmmaker of that excellent documentary about Brexit, how big a scumbags the bureaucrats in Brussels are. It's just really unbelievable with their rules and their regulations, and, how they have basically a separate city, and how, they're making six-figure jobs and they can't be fired. And, they're making a lot more money than even the UK Prime Minister. The stuff was just unbelievable there, how much they've sabotaged the European Union, a lot of the countries in there. So there's no way really for small business or entrepreneurs to compete. I've heard stories, I don't know if you've heard some stories, but I met someone at the YouTube creators event I went to in May. And this lady and her husband, they were Italian, or her husband was from Italy and had family there, so they used to go on vacation to visit his family in Italy. And there would just be so many stories of corruption there that, to start a business, you have to bribe all these government officials for a cash register, and you have to bribe, 3 government officials, different ones, large bribes to just get a cash register for your business or for a credit card machine, and you have to get government approval for a business website. It's just really unbelievable the amount of red tape and rules and regulations and taxes and other garbage that, some of these European countries in the EU have.
And it extends across pretty much all law. I recall Nigel Farage saying that some 65% of the laws in the UK are European Parliament laws now, in terms of the day-to-day lifestyle that people lead. Isn't just starting up businesses. I mean, it's literally regulating citizens on all manners of their lives, and with no accountability at that. We think of sovereignty and our nation states as being able to have representatives that hopefully would represent us in terms of how policy is set and laws are established, and that ain't going on. And the cool thing is that, I don't know, maybe 1 or 2 percentage points or so now are people looking to exit. So the Brexit campaign is having a slight lead. It's a very close race, and though we will be pulling out the stops and trying to push the fear button as we move closer to the vote, of course. But a lot more people in England are waking up to the fact that their sovereignty is flushing down the toilet, and they're not getting much in return for it. I mean, the so-called bargain of being a more integrated country within Europe was that you'd have greater markets and more job growth, and that overall you'd be stronger as part of Europe as opposed to being across the Channel Island. And that's not happening. So people are seeing through the propaganda. And the whole globalist enterprise that Europe represents, were it to experience Brexit, would begin to shake around the edges. And that also is a very good thing when it comes to just advancing decentralization versus this ever-increasing government control. It'll have a worldwide impact. I mean, the kind of increasing consciousness of decentralization versus ever increasing government. And we have separatist movements popping up all over the place. We have in Spain, we have even in the United States secessionist movements that are discussed in Texas and in my backyard with the state of Jefferson, and on and on.
Yeah, Eric, the other crazy vote that we had recently, so the Brexit vote hasn't occurred yet, but we had this vote recently, I think it was either earlier this week or last week. It was the Swiss vote about the guaranteed income, and that was voted down. So Yeah, I mean, people are starting to wake up, but not enough people have woken up yet. I've seen Mark Dice videos recently that a lot of people on beaches in California can't even name the capital of the United States anymore, so they don't even know Washington D.C. is, the
Right.
federal capital of the. Yeah, so it's I guess these educational systems. I guess I bet if you ask them, celebrity gossip or sports scores or stuff about sports, I bet they would know all the stuff that he asked them, but or maybe stuff about movies, but they don't even know that Washington, D.C. is the capital of the U.S. Pretty sad.
Yeah.
Well, welcome to Dystopia, man. I guess this happens, at the in every great empire. We've talked about this in the past, about what happened in Rome with bread and circuses and how dumb the Romans are, how dumb the people in the Colosseum, a lot of them were at one point towards the end and things like that about what was really going on. And it happened in the British Empire too. So, this is just what happens in a dystopian society. Everything's watered down with bread and circus and brainwashing. And, I think a lot of the immoral stuff, it starts with the sound money, the problem with sound money.
It's definitely a major part of it. And the growth of the excesses of our system have been enabled by, the fiat system. So we would not have as of an unstable system were it not for the monetary system enabling it.
Exactly. And, I think the average level of IQ, I think in a lot of kids in school 100 years ago, people knew math better, science better. The U.S. was testing at a lot higher rates.
Yeah.
Nowadays, for a lot of Americans, it's the immigrants who come in here in the United States and, are much better with the math and science test scores than the Americans who actually grew up here.
Yeah.
Okay, well, this is episode number 22. Welcome to Dystopia. I hope you guys enjoyed the show. Go and check out our other shows, and we'll be back again in a couple weeks with more to talk about more current events and other interesting things.
And also, feel free to send us some questions. You can post on the YouTube channel, or when I put it up on the News Doctors, you're also welcome to put comments over there as well too, and we'll answer questions going forward.